With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello, and welcome to the COB on this Thursday afternoon. I'm Nadine Blaney.
And I'm Juliette Sarli. Nadine, we were really trying to test those records again this morning. It looked like we might get there. You'll have a look at that peak in the first hour or so of trade, and then it all petered off. So a very, very flat finish here, and of course a lot of that to do with some profit taking in the index leader, CBA.
Yeah, well, 8,536 is where we sit for the S&P ASX 200 right now. So we'll revisit that once we run you through what happened on the day in markets and here on AusBiz as well. I can say though that US futures are coming under pressure, but I feel like I've been saying that a lot lately, and
then it turns
around.
really
turns around. So we'll leave that there.
It's hard to know what's going to happen on Wall Street or out of the White House, but today it was all about these rare resources. Of course, we heard from the European car makers overnight, the concerns there about critical minerals, really pushing a lot of those players up, the likes of Lynas. I think MinRes was up something like 12%. And of course, despite that gain, as we saw, the record that we were trying to hit was refused today.
Yeah, it was refused, but not all was lost. We still have CBA. I know that we were just speaking with Rachel Waterhouse from the ASA.
I thought it got sold off.
Let me see. I will refresh this, but I've got it on my screen up by about 0.5%.
Yeah, right. So some more buys, and that looks like a fresh record again. So
yeah.
Let's see what happens in the next 10 minutes of match off, because it looks like some buying might have happened into CBA at the close. 181.21, that would be another fresh record.
Yeah, BHP up by 0.25%. Goodman Group is looking good. So yeah, it's a very sort of patchwork quilty kind of picture when you look at the market, but when all is said and done, looks as if to be finishing relatively flat.
Indeed, and then of course we had the trade data as well, and no surprise, back in a deficit with the US, that very, very short surplus that we saw, which was the first surplus we'd had since Harry Truman was president, was really just driven by gold exports and of course the US importing our gold amidst the concerns about Liberation Day and the tariffs, but that's all petered off now, so back in a deficit with the US and the overall surplus narrow.
Yeah, tariffs still, top of mind. We've got Canada's Prime Minister Mark Carney saying that they will retaliate if they don't come to some sort of an agreement when it comes to those steel and aluminium tariffs. But he did say that they are in intense negotiations with the US right now, and also pointing out that that's across the board. That's not just targeted at Canada. That's the president talking tough. So we'll see if that holds up and what happens there. Safe to say, though, to your point, a lot of these critical minerals, rare earths companies, doing really well. Mineral resources, that seems like an outsized move. But yeah, it's, I guess, just picking up some of that enthusiasm for the resources space in general, as you can see.
Yeah, all right, let's get to the banks, because there was some profit taking in CBA, but as I mentioned, some buying looking like it's coming in on the close. I wonder if that's after Andrew and Rachel Waterhouse were just talking there about CBA.
Yeah, well, she was quoted in the Fin today as well, just talking about all of those people who might have inherited shares from their parents who've now passed. The likes of CBA, of CSL, of Telstra, all of those former Commonwealth agencies that were privatized, and how a lot of them also have to take tax considerations. But the point was, it's a good problem to have in many cases.
Absolutely. And let's have a look at healthcare, because there was a switch out of that today. We touched on CSL there, Ramsay Health down 1.3%, and Sonic off by around 1%. When it comes to some of the corporate news that we were following, of course, we touched on Lynas there, but also Coronado Global Resources, now up 13%. It's in talks to raise $150 million to add to its bottom line.
Mars, so that's a construction materials provider. It's also a little bit of a constructor itself. It is doing really well today, up by 7.3% after it came out and reaffirmed its FY25 earnings guidance.
Clarity Pharma, we had the CEO on, maybe it was last week or anyway.
Tuesday, I think, wasn't it? Gosh.
We where am I? It was up 12%, so continuing to get some good progress on one of its cancer products.
Catapult we did have on last week. It is a sports data company, as you know, and it's acquiring Perch, was a US-based company that uses 3D analytics to monitor gym performance. It's a company that's been doing quite well lately, but you can see there may be a little bit of trepidation given that it's looking to spend some of its cash.
Some sellers catapulting out of that one today. All right, with that great joke, let's get to Jessica Amir from Moomoo, who joins us. Always great to see you, Jess. Your take on what we've seen with the index moves and I guess CBA, which does look like it was up again at a record today.
Yeah, well, I think, can we call it the kiss of death, or does it mean we'll be going higher? Because the last time we were around these levels, it was February 14. It was V-Day, our favourite day of the year, apparently. But but then, of course, we all remember what happened after the last time we were around this level. The market fell 15%, and then we've gained more than we lost. So does it mean the market will, see some profit taking, or will we keep going higher? I think it was really interesting having a look at the options trades that came through broadly across the entire market. One of the most bought options was an option that suggests the market could get to 8,850 points. So that might imply a move of 3.7% upside, right? I think that is possible, particularly given that, we had really wobbly data from the ABS yesterday, overnight, kind of more dismal validation that we need the Fed to step in, and then bets rose for the Fed to cut, and bets are up for the RBA to cut as well. But we've also got company earnings continuing to come out better than expected. And I think what's really interesting, what you spoke about, is the metal trades. The metal trades are back on, and that's because the death of the US dollar is continuing. And then now we've got stimulus coming in. We are expecting some stimulus in China. I think that's another part and parcel with the fact that we are seeing these lithium stocks that have been beaten with a very, very, very ugly stick, seeing some love. So that is pleasing. But I think what's also really rounding out the selling is that we've got to remember that we just had NVIDIA. We've heard from the NASDAQ 100 companies, and they've not only pledged that they're going to buy more chips, but they've strengthened out the narrative that this AI freight train of stimulus is only just starting. It's at the antithesis. So I think that means that we need more critical minerals, we need more resources to build out, this new almost $2 trillion sector, and that is the AI broad thematic. So that means we need more precious metals, we need more uranium. That's why we're seeing uranium stocks kind of hold up off their lows, which is really good to see. So, I think the rally does have legs, but really depends on what happens from here. And of course, with the discussions, as you said, about the trade negotiations, potential trade deal. But I think no matter what, the market's going to keep on keeping on. It'll be high 5 years from now, 10 years from now. So even when we retire. So
when is that, Jess?
Yeah. I think I might be the eldest of the bunch here. Let's move on. Jess, I know that you've got a big focus on the chip makers in the US and some of those US growth stories that are tied to AI. Do you look favorably, I know we talked about the metal trade, but on any of those data center plays listed locally?
Yeah, so I think if we have a look at the stocks that are moving higher up off their lows, yesterday we saw some really nice moves by Paladin and Boss. Yeah, they've been down in the gurgler, but I think the fact that we're getting that validation from what's happening overseas. So we saw just a couple of days ago, what was it, 2 days ago, that Meta said, hey, we're going to tap on Constellation Energy's shoulders. Heck, we're going to do a 20-year deal with them to get uranium directly from them to power up our data centers for the next 2 decades. But I think this really validates that we need to be looking at uranium companies for the long term. And we also really need to focus on quality, because we know locally a lot of these companies aren't making money, but their virtue, they're having lovely days, sweet days. What's the saying that we say? When tides rise, all boats lift. And just because you've got a downward facing company in the ASX that is necessarily growing their profits and revenue doesn't mean it can't rise. So I think that's why we are seeing BOE, Paladin continue to break higher, because they actually have got a place in some of the most bought listed uranium ETFs. So think about URA, URNM, which is listed also in the US and locally as well. So yeah, I think that clients are playing that with exposure to the small caps. But I think we've also got to remember, broadening it out, we've got to remember sometimes we forget that Microsoft and Amazon also ink deals with Constellation Energy. It's not just Meta. So I really think we should be looking at uranium, regardless of what Donald Trump says. I think that this sector has been validated to keep on going higher. And that's because the data centers have actually signed long-term service agreements, and also they need to provide clean energy so that they can keep, their ratings, because they want to raise capital. They need to be deemed as green. And a lot of these companies don't even have AAA ratings as well. The only company that's got a AAA rating in the NASDAQ 100 is NVIDIA. So these companies really need to do all they can, regardless of what Trump does or says.
And speaking of ratings, Jess, I mean, where does Australia fit in this overall picture on concerns about the trade war, given that our economy is, you can argue, faring better? It hasn't been downgraded to the same extent that the US has.
I love that you asked that. I was literally speaking about this earlier with someone and saying that I believe our economy is going to be a key benefactor, in all this mix-up with all global trade tension. And one reason is precisely what you're going down the rabbit warren of, and what I believe is that our economy has maintained their AAA rating, but also just a couple of days ago we heard the OECD, of course they downgraded global growth, of course they downgraded the US, of course they downgraded Australia, of course they downgraded China. Everyone got a downgrade, who didn't? But one thing is for certain, and that is Australia has got that AAA rating, and we also have got better expected GDP than the US. So what's not to love about Australia? Our banks, the big four banks, they're backed by, what was the estimate? About 60% of mortgages are with CBA in Australia. 60% of Australian mortgages are with CBA. So, and then you think about the trillions of dollars that are buying our banks each quarter. There's a $4 trillion pile of superannuation. So there's a good reason that our banks will keep on keeping on. And then I also believe that foreign capital will start to come into our shores in the second half of the year, just supporting that narrative of what you're thinking as well, Juliet, and, ironing out that the OECD believes that our growth can continue more than the US.
Jess, there's a lot for us to take away from that. We really appreciate your time to wrap the market today. From Mumu.
Thanks so much.
Great
to see you both.
You too.
Yeah, so key themes, that keep coming up. CBA being one of them, massive stock. But today, much smaller on the radar for our stock of the day.
And that was Tyro Payments. We heard that the CEO is leaving. The stock got a beating on that. And you spoke to Ben Clark from TMS Private Wealth and Mark Gardner from MPC Markets.
I've got to say that the business, I think, is better quality than it's ever been. The share price is weaker than it's ever been. It's a bit of a head scratcher. What I would say that's probably less understood, and what I mean by better quality is that more than half of their revenue now actually comes from the healthcare sector. So it's not as exposed to the hospitality sector as it used to be.
I feel a little bit sorry for the company, really, the share price and the shareholders particularly, because I don't think I've ever seen as strong an overwhelming analyst buy for a company that's trading below, even the lowest of target prices. So, and it's just a stock that's promised so much, and just from a share price point of view, has delivered so little. So. I don't know whether, I think it was down a lot more than that early on. I don't think a change of CEO is going to be, whilst he's done a good job, I think it's at a mature stage where it's not like a startup anymore. Yeah.
So, Juliet, both of my guests finding a lot of interest in Tyro, actually, and there was a few beaten up stocks on the list today, and a couple double buys, at least one, but a lot of interest in some of these names that you would recognize that have just had a really tough time as of late, thinking maybe it's the bottom of the share price falls for them.
Yeah, and they come up with, what did Jess say, the tide and the boats. All right, let's have a look at the stock leaders. Of course, we've touched on a lot of these: MinRes, PLS, Lynas, Clarity as well, and IGO was up there by a 9% gain.
Yeah, really interesting to see MinRes there. Let's get to the flip side. So IDP Education, further pain, down by 7% to $3.54. Helios, Capricorn Metals, Pexa Group, and Volt Minerals as well.
All right, in the small end of town, 29 Metals Limited, I mean, again, just this rising resources indication. Coronado as well, we touched on there, rising by 13%. It's trying to tap the market for cash. And I guess Main Pharma coming back a little, up by 11%.
The downside to this is Pain Check. Trouble with the FDA, off by 21%. There's Tyro, our stock of the day, down close to 10% to 82 cents per share. And Cosol, I think it updated as well. It is off by close to 10%.
Tonight we get Eurozone first quarter GDP, but of course the big announcement is the ECB rate decision. A quarter point rate cut expected there. I was having a great conversation with Phil O'Donoghue from Deutsche Bank, because of course Deutsche Bank is a German bank, about what they're going to do. You can find that on AusBiz, because also overnight we had Berlin approve this 46 billion euro corporate tax relief package trying to kickstart growth in Germany.
Yeah, it'll be interesting to see what they have to say around tariffs as well. We get the US trade balance, but we also get the weekly jobless claims report, which will be of much interest given this is the big data heavy jobs week. And we get Fed Speak, so that includes Kluger, Harker, and Smith. So with, as Jessamir from Mumu said, these rising expectations of the Fed having to step in sooner rather than later, we'll see if they put any meat on the bones of that notion.
All right, tomorrow, that actually came out today, the Taishin Services Index. So we'll move on and have a look at where the market has finished, because I think there wasn't really... there isn't really much happening tomorrow, given it is a Friday.
Friday, but ahead of a long weekend, don't forget that.
Yes, exactly. So maybe some risk taken off the table ahead of the long weekend.
And that jobs report in the US, the non-farm payroll report.
Yes.
7 out of 11 sectors were lower today. So it really was a mixed picture there. Infotech was the best performer, gained about 0.75%. It's up by about 1% over the past 5 days. Materials doing well, A-REITs as well, I guess with those changing interest rate expectations.
Indeed, and a pretty flat finish. So just 3 points lower on the ASX 200, 8,538. And as we saw, IDP, gosh, that has taken yet another whacking, the worst performing stock on the ASX 200 today.
So we'll have central bank speak, central bank action to speak of tomorrow when we join you live from 9:45.
See you then.